Hi, everyone. Hope you're doing well today. This is Will, aka Dr. Financial Literacy. Today, I just wanted to talk about my new concept, accelerated velocity banking. Accelerated velocity banking to me is taking some principles and concepts from the world of velocity banking and taking principle and concepts from the world of accelerated banking. Once I put the two together and started really looking at them and trying to get a conceptualization of them, I worked hard to try to improve my credit. So this is how I did it and how I use accelerated velocity banking, or what I call AVB. Step one, I started looking for credit because I wanted to reduce my debt in order to pay down the three properties. I came across the concept of accelerated banking, where I saw individuals throwing chunks of debt at another debt to bring it down. I saw a number of videos and I thought, okay, maybe I can do that. So I started doing accelerated banking initially with a credit card, identifying the credit card and putting chunks on it and bringing it down. One way that I did that was went to a national credit union. I took out a pledge loan from that credit union, took that large chunk of about 2,000, paid it on one of the credit card bills, then started making payments through that credit card using my check, and it started to come down, and I started really liking the process. So one is a method that chunks debt at debt. The second thing that I use, just start living even further below my means. Some of the places that I used to go and shop in general, particularly some of the stores, I just cut back on those items and basically started really using my money to look at which credit cards I need to attack, pay down the bills, keep it going, and then make the payments as regular. I then went out and get a new job, didn't do anything else in general, just started really focusing my money. So my second step was to focusing where my money was going, focusing money use. Okay. Did I need to be at this place eating? Do I need to be at this place shopping? What is some of the goals that I have in mind? I had to identify my goals and I had to make sure that I wanted to be out of debt using the resources that I had. Third, is important is creating a budget. Having that budget, looking at that budget, seeing where my money was going, that definitely helped me to see more of where my personal income was going and how would I like for that personal income to work better for me. So in general, putting together a budget and trying to stick with that budget. Emergencies can't make, I mean, not emergency, but things may have come up. I have used my own money in a different way that I did not plan to, but overall, I tried to identify my budget. In looking at the budget, I wanted to make sure that I understood three important numbers. My income out in California, 3,390 a month. Now, that is up probably the last 2 months, but prior to it, where many of you have watched the videos, I was probably at 3,200, so I got a pay increase. Second, I had to look at my expenses over the last 4 months and trying to bring down the debt. My expenses at average about 3,000. Now, when I initially started really looking at accelerated velocity banking, or AVB, I was probably $2,500 in the hole, and I was carrying approximately about $350,000 in debt. As of now, the last credit union report that I looked at and that I've shared before, I think I'm at now 328. So I reduced my debt in general. Again, watching a number of videos, watching a number of YouTubers, particularly looking at how they use velocity banking and accelerated banking. As a political economist, I really looked at the literature, try to see what research and data is out there in general. I did a Google search, Google Scholar, and when I put in the terms velocity banking and accelerated banking to see what researchers have looked at to isolate, you really didn't see. So I just started running my own personal experiences to see how both of those concepts work. And I continue to run personal experiments. The next experiment that I will be running as a result of cleaning up some of my debt is to use a $50,000, $500 HELOC to wipe out this remaining $280,000. So, again, I've been able to obtain a home equity line of credit. I'm gonna start running other experiments through that to see how it works out. So that I will be doing using the HELOC and also what I call accelerated velocity banking in the real world, not in the theoretical world, not in the ivory tower, but use my background to say, okay, I'm gonna run an experiment. I'm gonna run a case study on myself to see how and what I can do with a 50,000 home line of credit to reduce 200 and about 200, $228,000 in debt. Okay, so I've been successful, I think, in reducing at least 10,000 to $15,000 in debt over the last few months throughout using a number of strategies. So I have taken out pledge loans. I have used cash advance and running experiments to see how the money can work within within the environment of velocity banking, accelerated banking. I think I have some principle down. I'm gonna continue to use those principles. There has been a reduction in my expenses in general. My cash flow throughout this period has been probably about I would say 390 plus. Some months are better than others in general. But I've taken all of the resources that I have at my disposal. When I initially started using accelerated velocity banking, I had approximately maybe about $5,000 in the bank that I chunked at also this in reducing my debt. But once I started using velocity banking or AVB, because I'm looking at combining the two and taking principles from both those theories to see how they work in general to bring down my debt. So now I am super excited looking at the concept of accelerated velocity banking. Hopefully, I can get other scholars involved that they can research it and look at it in the real world as it applied. I will continue to work with my clients in using AVB to try to bring down their debt in general. Again, so thank you very much for stopping by. My name is Will, aka Dr. Financial Literacy. I am a political economist. I am not a financial planner. I'm not an attorney, and I'm not a counselor. This is just based on my real world experience working with my own money and working with my clients to help them get out of debt. And I'm using a term that I'm trying to flesh out in general. I've also created another website or another page where I'm calling it the National Association of Velocity Banking and Accelerating Banking Professionals. So that those individuals who have case studies, those individuals who have been in the field. They're interested in sharing their stories, so that we can put some data and information together and maybe advocate at the policy level, nationally, internationally, state, county, for velocity banking as accelerated banking, velocity banking, as it helps other individuals. So thank you very much for stopping by. And I hope to continue to develop accelerated velocity banking as a concept, define it, look at the data, work it out in the real world, run my own real world experience, work with clients, and also work at the academic level to try to understand this phenomenon so more people hopefully could look at it and see if it benefits them. Until next time, thank you very much. Have a great day.